Good afternoon. Asian markets rose as investors navigated the changing situation in Russia and Ukraine. Japan's Nikkei gaining 1.2%. Hong Kong's Hang Seng Index was up about 0.33% in afternoon trade. Meanwhile, energy giants BP and Shell and global bank HSBC joined a growing list of companies looking to exit Russia. Yesterday's Russia economy was already reeling and the ruble plunged to a record low, while the central bank doubled its key interest rate to 20% and kept stock markets and derivatives markets closed. U.S. stock futures, war stocks were closed lower in overnight trade, a little bit volatile, and the three major indexes posting sharp monthly losses as investors assess the uncertainty in Russia and Ukraine and, of course, the related sanctions. To give us some perspective in terms of other news that has caught the headlines and have also caught the minds of investors, we are joined by Martin Smith, who is a portfolio manager at Anchor Capital. Martin, thank you so much for your time. I mean, given everything that is still happening as we, take into consideration geopolitical tensions, how is our JSE local market reacting to all of this?
Relatively well, I think. Actually, very well on a relative basis. I mean, I think it's largely got to do with the commodity side of things. It's keeping our rand very, very strong. Again, sorry, I said relative to the rest of the world. So it's keeping our rand quite strong, which is obviously then helping the commodity side of our market. So we're doing well relative to the rest of the world. And even after we saw an aggressive sell-off in February when kind of the announcement was made around Russia and the intentions in the Ukraine, we've seen a V-shaped recovery. And again, we're holding up very well. And today, I think the news out of PSG has also buoyed the market a little bit.
Right, so let's talk about that news out of PSG. They're saying that they want to unbundle their investments and depending how things work out, they'll possibly delist. What was the issue here when it comes to the, the PSG share price and the intrinsic value here?
Okay, perfect. So before the announcement today, PSG was trading around 80 Rand a share. If you look at them breaking up the sum of the parts, the 80% of the listed stuff is essentially Curo and PSG Consult. You now get a share price with the 23 Rand they're going to pay shareholders of around 114 Rand from a kind of intrinsic value perspective. You might say there'll be a bit of DWT on the 23 Rand, so call it an intrinsic value of 109 Rand. Factor in a little bit of time value of money. This deal will probably only go ahead in August of this year. So I would say between 95 and 100 Rand is where the share should be trading, and it's trading about 97 at the moment. So there and thereabouts.
Is it an end of an era? I saw, someone post on social media after PSG come out with the saying that, for a company that has been so successful in, investment opportunities, it might be the end of an era if it delists from the JSE.
Yeah, absolutely. I mean, this has been a giant of the JSE for a number of years. But if you look at what holding companies have been ascribed from a discount perspective and the like over the last few years, I think it's a good piece of business. Like I said, you can see the share price already has jumped up 20% today on the back of this announcement. So from a numbers perspective, makes sense. From a sentiment perspective, obviously, is a little bit sad, obviously, that it's going the way it has.
Wilson Bailey Holmes also released their financials earlier today. And I suppose some people can say the common thread here between Wilson Bailey Holmes and some of our local companies is that Australia just doesn't seem to be gelling very well with some of our local companies. What did you make of Wilson Bailey's numbers?
Yeah, no, you're absolutely right there. Australia is the big thing for them at the moment. They came out with the trading updates about a week ago, and we saw a massive sell down on the share on the day because essentially losses that are happening in Australia and the operations there have caused quite a significant loss from an earnings perspective for the company. So massively wide of consensus. You saw the shares sell down aggressively. Today was the actual results. I didn't really see anything there that kind of changes my mind and makes me want to kind of jump back into the share from these levels. The SA operation is doing well, but again, the big the big detractor of value at the moment is what's happening out of Australia. And I think it's going to take a little while before the market kind of trusts management to kind of sort that out.
Let's take things a bit more global here. What do you think would be a major risk for markets if these ongoing geopolitical tensions continue?
So I think the two big things are essentially spillover risk, i.e. this turns into World War III, as a lot of people are already hoping it's not going to, and it just becomes a kind of full-blown war across Europe. The other one is, in essence, what it means for inflation. Because you've got to remember, in January, the world was already very stressed around inflation. What is the Fed going to do? And then you've obviously seen with these political tensions going on, the oil price jumping above $100 per barrel. So people are worried about the kind of secondary effects that'll have on inflation and then what that means from a Fed perspective. So I think the two big things are, one, does it spill over into something bigger? Does it maybe give China ideas around invading Taiwan? And the other side of things is, what does this mean for inflation?
On that topic of energy prices, if energy could be on the table as another possible mechanism for sanctions, where do you see the oil price going in the short term, and what would be the impact? I mean, inflation is one that you just mentioned.
Yeah, so, I mean, that's essentially the biggest bargaining chip that Russia have. They supply 40% of Europe's energy. They are the third largest supplier of oil in the world. They have a massive kind of bargaining chip insofar as the world being very nervous to kind of impose sanctions on energy prices because of how reliant they are on Russia. So I think Biden has spoken about it in the past, saying that they won't go after energy, and so far he's kind of kept true to that word, and they've gone mostly after the financial side of Russia's businesses and corporations. So I think it's less likely. If it does happen, I think you'll see a massive effect in terms of energy prices and obviously in terms of inflation. So hopefully it doesn't happen.
Yeah. Well, Martin, thank you so much for your time. That, of course, is Martin Smith, who is a portfolio manager at Anchor Capital. This week, we have a host of U.S. Fed presidents that are speaking. And, of course, we will be paying attention to dollar movements as U.S. President Joe Biden delivers his State of the Union address. And then we've also got an OPEC Plus meeting tomorrow and a whole range of events that we will keep an eye on for you. That is it for me. More business news with Nompumelelo Siziba after the break. Goodbye.